So we are doing like October, November 23, paper 21, question number 2, which is of limited company. Can you tell me one difference between a capital reserve and a revenue reserve?
Yeah. So revenue reserves are created by transferring an amount from the profit for the year, and capital reserves are created because of non-trading activities.
So capital reserves are created because of non-trading activities and revenue reserves are created.
Revenue reserves are created by transferring an amount from the profit for the year.
Transferring an amount from profits for the year. Okay, fine. Now what else do they want us? They want us to prepare a statement of changes in equity. Correct?
Yeah.
Okay. I have been given the balances on 1st July 2022. What is the balance?
30,000, 4,500, 6,000, 5,240, and total is 9,740.
Okay. Then afterwards,
Then I'll do bonus issue.
this, what is this?
What? Oh, you're marking something. Acha, I couldn't see. Original cost 80,000 had a valuation of 86,000. No other non-current assets have been revalued. So
There was
6,000.
a land whose original cost was 80,000,
Hmm.
but it had a valuation of 86,000. No other assets were revalued. So this has already happened on 1st July 2022, because of which you have a revaluation reserve of 6,000. Yes, this has already happened on 1st July 2022, because of which you have a revaluation reserve of 6,000.
Yeah.
Come on, go ahead.
So now made a bonus issue of 1 ordinary share for every 6 shares held. The directors maintained the reserves in the
This
most
is
flexible form.
1 for every 6 held.
Yeah.
So I have to see how many is held.
So 30,000 divided by 0.50 into 1/6.
30,000 divided by 0.5. So this is 60,000 is held. So 60,000 is held. So the bonus would be 1 by 6 into 60,000. So how many shares you will give as bonus?
6,000. 10,000, yeah.
So you will give 10,000 shares as bonus. What is the face value?
0.50
So what is the amount of bonus?
into 0.50, so 5,000.
5,000. Because of bonus, what happens?
Bonus, you're giving like without any investment, like shares given to us. So you're going to minus it also.
Share capital will increase.
Yeah.
5,000. Reserves are maintained in the most flexible form.
You'll minus 4,500 from share premium and 500 from general this revaluation reserve.
Revaluation reserve cannot be used for bonus.
Okay.
Okay.
Hmm.
So this bonus issue is there.
Hmm.
Go to the next one.
Paid a final dividend of 0.04 per share on all shares in issue at that date.
So how
So
many shares in issue at that date?
5,000 divided by 0.50.
60,000 was the original issue.
10,000 was the
10,000 was bonus.
70,000.
70,000 is there in the issue. So how much you will give final dividend?
Into 0.04.
So
So
70,000 to 0.04.
2,800.
2,800 is what? Final dividend.
But miss, don't you have to multiply that by 0.50?
Why? Dividend is given on the shares.
Okay, so if it says
Shares. So we are giving on the number of shares.
okay.
Okay.
Yeah.
So final dividend I will give from where? I don't have anything in share premium.
Retained earnings.
From retained earnings. 70,000 into 0.40 is
2,000.
2,800. I will remove from here and I will remove from the total. Then there is right issue. How is the right issue?
Mean a right issue of 2 ordinary shares held for every 7 shares held at a price of
2 shares for every 7 held. So how many was held with us?
35,000.
Shares. I'm not told. This is the face value. Share capital is number of
In
shares into
dollars.
face value.
So shares, then I'll divide this by 0.50, no, to get the shares.
Okay.
So 70,000.
So you're giving 2 shares for every 7 held. So you
So
will
into
multiply it with
2 upon 7
70,000.
will be 20,000.
So how many shares you're giving?
20,000.
Okay. At what price are you giving this?
0.65. So 15 will be a premium.
0.50 will go towards share capital.
Yeah, and 0.15 will go.
0.5 will go towards share premium. So 20,000
will be 10,000.
0.50. 10,000 would go towards share capital.
And 1,500 will go towards share premium.
Sorry?
1,500 would go towards share premium.
Into 0.15. It's 3,000. 3,000 will go towards share premium. And your total will remain 13,000. Yes?
Yeah.
Then next.
Next one is paid an interim dividend of 0.02 per share on all shares in issue at that date.
So 70,000 was there and 20,000 was right issue.
Yeah.
So total how many shares I have? Total how many shares I have?
90,000.
90,000 shares I have. I have given dividend of how much?
0.02.
So 90,000 into 0.02?
1,800.
1,800 I will give interim dividend from where?
Retained earnings.
Okay. So you will deduct from retained earnings and you will deduct from total. Then land was revalued at 17,500.
So it's 86,000, no?
Yeah.
Minus 75,000. So 11,000 devalue. So will be
1,000 minus 75,000. So 11,000. But in your revaluation, you have only 6,000. So you will use 6,000 from revaluation reserves. And balance 5,000 you will use from retained earnings. And 11,000 will also go away. Yeah. Draft profit for the year. Where is
43,600
profit for
be
the year?
added to retained earnings,
And
the total.
now you will get it on the last date
Hmm.
at 30th June 2023. So this becomes 45,000, 3,000 dash 83,740, and the total is 131,740. Yeah,
Hmm.
like this we do.
Yeah.
Then you will check like this.
Hmm.
What is this?
The total.
This is owner's equity,
Okay.
or you could say this is shareholders' funds. Okay. Now I
Hmm.
want you to read this, think about it, then we will discuss.
Okay.
Read the question.
The directors of Q Limited have plans to expand the business at a total cost of 54,000 and are considering two options to raise finance. Option 1, make a rights issue of 4 ordinary shares for every 5 shares held at price of $0.75 per share. Option 2, issue a 10% debenture of 54,000.
Okay. So directors want to expand the business.
Hmm.
And to expand the business, they can either make right issue or take loan.
Hmm.
So we talk about right issue, 5 marks, right?
Yeah, so 2
2, 3
to
points we talk about right issue, and 2 to 3 points we talk about taking a loan, and then we advise them whether they should increase capital or they should increase the loan.
Hmm.
So what is option 1?
Right issue.
What is there in right issue?
So it will be a permanent source.
Okay, permanent source. What else?
You don't have to give payment, like you don't have to pay them back.
Okay. Ownership will remain the same.
Yeah.
Okay. How about option 2?
In option 2, they will have to pay a debenture interest on this.
Okay. Security might be given.
Yeah.
What else?
They can get this for long.
Current debenture is already 40,000.
Uh,
Yeah, which is
yeah.
due for payment.
Hmm.
What do you think?
I think option 1 is better because option 2,
Because,
my liability already exists. You'll only be adding to it then.
okay, fine. So whatever option you write, you can give reasons for it, 5 marks. So with this, we
Hmm.
complete October, November 23, paper 21.